Hello and welcome to the Rask Network. What you're about to hear and see is limited to general financial information only. Please be sure to speak to your financial planner or refer to our financial services guide available at rask.com.au/FSG before acting on the information.
Angus, thank you for taking some time to join me on the podcast.
Thank you so much for having me.
It's going to be a good chat. We're going to talk dating apps. We're going to talk about some wisdom that you might have, I guess, soaked up from one of Australia's investing legends. We're going to talk companies, technology, a bunch of different stuff. But usually what I do, Angus, is I go back in time to understand someone's journey to investing. And I normally do that in a very chronological way, early influences, that sort of stuff. But we can dive straight into it and start talking about dating apps, because this actually does weave through your life. Not too far back, but it does weave through your life recently. So let's just start with that. Let's start with dating apps, how they make money, how you first became involved, and then I'm sure we'll have plenty of follow-ups.
Sure. So, yeah, it's funny. I've sort of somehow become some sort of a spokesperson for dating apps. So they make money by selling subscriptions and selling access to their network. So essentially it's a private network that's selling access to it. I got involved in them, I remember in about 2013, I think I started looking at Tinder in Sydney, and it was a bit creepy. There was still that hangover from the, what your mother always told you, don't meet strangers off the internet kind of days. And, it was a little bit like Craigslist, and there were those kind of businesses. It was a bit creepy, but I remember you're looking at these things and there's attractive people and there's this kind of instant kind of emotional engagement with it. And I remember thinking, this is interesting. This is something different. It's different from the other social medias that I've used. But I moved to California in 2014 and I was there for 7 years, and it was kind of a revelation in California, because it was in Los Angeles anyway. It was such a high velocity dating environment. It was so much fun. I mean, you've got 18.5 million people. So, 3/4 of the population of Australia in a single city, incredible gene pool, and just the culture is pro dating. People go out. So it was just this amazing thing. And this is when the apps at that stage, they were really in a kind of scaling phase. So they didn't care about making money. I think the entire time I was in America, I don't think I ever spent $1 on a dating app. Skip forward, I was there about 7 years. I came back in late 2020. And I remember I started using them in Australia as, still a single person at that point, or a single person at that point. And to my kind of shock and horror, you sort of had to pay to get the apps to work. They just weren't working. I went from getting lots of matches a day, or, a week anyway, to very few. And it was just this real kind of shift. And I thought, well, this might be a good business here. And they'd started adding these features. So you can pay for a subscription, which might be, I forget what it is now, about $20 a month or something. And then you can pay these, what they call a la carte fees. So just to enhance that experience in the network, to either send a message to someone directly or to make yourself more visible on the network. And I thought, well, okay, they've cracked the business model here. And yeah, so you spoke of Kerr earlier. I actually took it to Kerr, pitched to him, and he was like, nah, bad investment. I jumped in anyway, and it turns out he was certainly right on that.
So this is an interesting move. Not a lot of investors, at least professional investors in Australia, go to Los Angeles as a big part of their career. Normally they might say New York or London or even Hong Kong as major financial hubs in the world. But you went to Hollywood, and my understanding is that you started to write a lot, and it wasn't what you're doing now. So can you tell us a little bit about that part of your life?
Yeah. So I've had if I can go back just a little bit further, a sort of interesting thing happened when I was 20, which is I broke my back. So I'm actually a paraplegic, incomplete. So I can walk around, but I sort of have a bit of a limp. I've had multiple surgeries over the years and that sort of stuff. But because of that, I was skiing around the world, broke my back, then studied. So I was at university for 10 years. I did 3 different bachelor's degrees, started a PhD. I was in the middle of my PhD. It wasn't really for me. I went to California for an applied chemistry conference on artificial photosynthesis with a Buddhist monk, as you do. And that's the completely true story. And then met a girl, chased a girl to Los Angeles, ended up in LA and started writing for a magazine there, and then became the senior editor of the major West Coast fashion and culture magazine in Hollywood. So I did that for a couple of years. My background was weird. My education was unusual. So I did like physics at university. I did law, and I did English literature. And that physics degree gave me, I'm reasonably numerate. And so when I kind of got this opportunity to work in cryptocurrency, so I actually started working in tech in California. So I did a few years in the Hollywood fashion culture celebrity world, then went into cryptocurrency. And so worked in crypto for a couple of years. And then that was sort of because I had some success as a crypto analyst, crypto investor. I was able to, then start working for Kerr and learn to become a stock picker. And it's still a journey I'm on, but it's been a pretty interesting couple of years.
Wow. Not just a couple of years. But I didn't know you did three bachelor's degrees.
Yeah. So I started, basically because all I'd wanted to do was skiing in a way. I mean, I had started uni, but I didn't know what I was doing. It was just kind of like, well, I might as well. But I wasn't taking it very seriously. And then I'd started in a Bachelor of Social Science. I switched to arts, and I almost had I was doing history and philosophy and English. Finished with an English major, then did science law down at the ANU in Canberra, which was amazing. And, just interesting kind of doing those courses together and just sort of the way it makes you use your brain. And then I got approached. I wasn't going to stay in academia. I got quite over it, to be honest. But then I got approached by a professor to be his research assistant. So then I started working as a research assistant, and that kind of turned into a PhD and doing academia. But I only lasted a few months. I think, one of the things I love about the stock market and looking at businesses is in any given day, you can be looking at lots of different industries and lots of different technologies and different things. A PhD requires such intimate focus on one thing, and that doesn't really interest me so much. I didn't at that time anyway. It wasn't for me.
How did you go from like fashion and celebrities to cryptocurrency or like technology in general? Like, how do you make that?
Just putting yourself out there in a way. So a very dear friend of mine who's a very good tech CEO, Shana Walsh. So she has a company called Coral, but at the time she was working as a venture capitalist, and I knew her from university, but we were really good. We were still very close friends, but very close friends in America. And she was working more in like robotics investment and that sort of stuff. But she was pretty on the pulse with the kind of what they call Silicon Beach. So you've got Silicon Valley in San Fran. In Los Angeles, it's Silicon Beach, so sort of Santa Monica, Venice area. And there's, some really big tech companies down there, Snapchat and that being probably the most famous. But, there's Google offices, Facebook have offices down there. And she sort of said to me, you need to understand Bitcoin. This is going to change everything. And, I had a little bit of exposure, enough to get myself into trouble with cryptography. But I read the Bitcoin white paper, and I listened to a podcast 5 years earlier, and I was like, what's this shit? And I didn't get interested in it at all. But as soon as I read that white paper, I was like, oh, it sort of turned on some lights in my head. I worked with some really interesting crypto companies. So one of the first decentralized exchanges, we were a little bit too early. One of the major ICO platforms, so initial coin offerings. I came within a biscuit of working for one of the first, what became NFTs. I took a different job that would let me stay in Los Angeles at the time. But yeah, so worked with a wide variety of different cryptos and saw, that 2017 boom. It was so outrageous. You just saw such crazy things, and it was, really good exposure, to be very skeptical about investment opportunities. And frankly, just to see, because there were all these characters there who, had put $10,000 into Bitcoin when it was cents on the dollar, and now are worth hundreds of millions of dollars. And, in their mind, they were like Warren Buffett meets Einstein meets Gandhi. And just it's this weird, like Burning Man kind of vibe, but had made tens of millions of dollars and often kind of sometimes really believed their own hype. And so you were seeing just some, it was an interesting world to have kind of seen at that early stage, and then, see it wipe out a few years later.
Did you invest at that time?
Yeah, I mean, once I'd read that paper, I was pretty interested, and I was doing some jobs where I was getting paid in crypto, so so definitely it was something that I was not afraid to be dabbling in pretty early on.
And you're still invested today?
Yeah. I still, I basically I like Bitcoin. I've a little bit, Ethereum. I'm at a relatively limited exposure to it, but I think just looking at the tea leaves in terms of both Kamala Harris and Trump addressing Bitcoin conferences, one of the largest super PACs is now crypto finance. They've raised something like 300 million. One of the biggest lobbyist groups now is a crypto thing. So I suspect, and I could be completely wrong, but I think I can see, it looks to me like there's another uptick in the cycle. So I'm sort of thinking through how I might kind of get a bit more exposure to it again in the coming months.
I didn't even think we'd ever talk about this. I knew it was in your, let's say, history. How do you, can you square this circle for me in terms of how do you go from a value investing mindset to a cryptocurrency mindset? And I don't mean that in a judgmental way, more so just in terms of a curiosity way. How do you think about value capture, value creation in terms of just as an investment, so to speak? I think of an investment, if I just take a principled approach, it's an investment for me is something where there's risk and return, but I have some type of way of understanding that profile, if that makes sense, or the asymmetry that might come with something. And I struggle to do that with Bitcoin in particular. I understand supply and demand, obviously, but beyond that, I don't know.
Yeah, it's a really interesting question. I mean, I guess there's some amount of schizophrenia in the way that I view these things, because I do appreciate that, cash generative assets are, intellectually I see that is a better thing to be spending money on, but I frankly made much more over the years on crypto than I have on stocks. So that's a difficult one. And I kind of, Bitcoin's, I think you can't put this genie back in the bottle. As long as the cryptography remains sound, and that's not necessarily. There's a guy called Terence Tao who's he should be the most famous Australian that lives, frankly, because he's probably the best mathematician in the world, and he's an Aussie, and yet most Aussies do not know who he is, and that is just astonishing. But I saw him talk many years ago about factorization of primes, so one of the things that's kind of underpins a lot of cryptography, and it appears to be both quantum resilient and quantum computing resilient, and it appears to be, it's got a good track record, right? No one's lifted the skirts in SHA encryption, but it's not necessarily, as far as I can see, a complete given and perfect. But to go back to your question a bit there, one of the things, I left Los Angeles in late 2020, and it felt at that time like society was collapsing. The LA riots kicked off. There was, when George Floyd got murdered, there were protests on the street that next day. I was in those protests. There was tear gas in the streets. I got to the airport, to LAX, and there were so few people on the flight that as I was walking towards the desk, they said they knew my name in advance and that the departure hall was empty. And in those environments, I think there is, without sounding like too much of a crazy person, the world is not necessarily as inherently stable as we think. Having value of any sort attached to a protocol that can't be interfered with by governments, it can be interfered with by governments, but it can only be interfered with. It can't be turned off. And I think there is a value there that is maybe not fully appreciated. And if you look at most countries where there is very volatile economic or political circumstances or monetary circumstances, Bitcoin is usually much more valuable there. It's a higher trading price because people use it. So Venezuela, parts of Africa, it is used now as a real asset that is not attached to central banks. And I think there is that value there. And how do I square that with a cash generative asset that compounds over the long term? I don't know if I can.
Yeah. Well, you can have two opposing ideas in your mind at the same time, right? That's
or 20, right?
Yeah. It's one of those things I mean, yeah, we don't have to make the whole episode about this, but because there's so many interesting things to talk with you about. But it's one of those things that I think about quite a bit, and I wonder if like people in like developed economies investing in Bitcoin actually has an imperfect or improper outcome for people in third world countries or people where there aren't stable democracies, in that increasing the price. I just don't know if that that demand that comes from us, where we do have relatively stable currencies and stores of wealth, I just don't know. It's something that I think about it a lot, to be honest. I don't have much other than a very, 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 very token amount of exposure to Bitcoin. So I'm not really, I'm just curious about it in general. But thank you for bringing Terence Tao to my, I don't know how on earth I have yet to see that name.
He is an astonishingly clever individual. I think he got a perfect score in the SATs when he was like 8 years old. In mathematics, and he's at UCLA. He's been there for a long time, but it's his breadth of all these different domains of mathematics. He's pretty much the lead person. He's a very, very, very impressive guy. And why doesn't he get Australian of the Year? You know, like no shade on cricket, but I don't think we need another cricketer. I think the fact that Australia can lay some sort of nebulous claim to the probably the smartest person on the planet, you know, we should celebrate that.
That's great. Well, thanks for bringing him to the Australian Investors Podcast attention. Because
no problem.
That all probably helps, mate. So that's really wonderful. So yeah, I can imagine you did get some quite interesting characters come across your desk and interact with them at the time when you were in LA. But you returned to Australia, and I'm particularly interested in what happens from there. Like, how do you then go from that to stocks and all those types of things that led you here today?
Yeah, so I came back in late 2020, and I've known Kerr's family. I've known Kerr since I was really a kid, since I was a teenager anyway, and I'm close with his family. They're absolutely wonderful people, and Kerr and I honestly don't remember how it had started, but way earlier, so probably in about 2016 or 2017. We had started talking a little bit about crypto. He knew I was working in the space, and I knew, so he wrote about it in 2014. I think he was really responding to the price action, but he could tell there was something going on. And at that time, I mean, 2014, it was probably, $500 a Bitcoin, maybe cheaper. And they didn't kind of make a move on it, but we started speaking, I think in about 2017, just over email, because, I would, a few times his daughters visited me in LA, and I would see them when I'd come back to Australia. So I don't quite remember exactly what had happened. We had started talking about Bitcoin in particular, but crypto more broadly. And he sent me a bit of analytical work that one of his analysts had done that really was sort of poo-pooed it. And the guy had some really interesting points, and there was some good analysis there, but there were also some things I sort of thought he got wrong. We had a bit of an exchange. And then fast forward a couple of years, and I was back in Australia, and I went to lunch with him, and we started talking it, and he was really interested in it and really engaged. And he's very knowledgeable about crypto. He's become it sort of, we sort of went through a process together, and we started actually, putting some money into play, and just we had a really interesting time. But his sort of reaction was, well, this is garbage, but why don't you come and I'll teach you how to properly run money? So it was very, very generous of him, and I sort of got an apprenticeship with him in stock picking. And in, asset management more broadly. Worked for him for a couple of years, learnt a huge amount. He was very generous with his time. He's got a very, he's so high energy. He's so nimble. A different style to me for sure, but had it was a wonderful grounding, and in learning about, stocks.
Mm. What is that? It's not every day that you hear someone who probably, like, for people that don't know, I pronounce it Kerr. Is that correct? Kerr Neilson. Probably one of the most highly regarded investors in Australian history. Maybe there would be a handful, but he's definitely in there. It's not every day that happens, right? And obviously you have a connection to it going way back. But what did that look like when he was giving you an apprenticeship, so to speak, like when he was helping you discover this world called the stock market? What did that actually look like in a practical sense? Like, what
high intensity.
Like, would you sit down and debate stocks? Would you?
Oh, 100%, 100%. There were sort of different phases, because when I first started working for him, well, soon after, so probably about 2 months into, so we were looking at cryptos together for, say, 6 months, but then we were looking at I started working, and we were sort of setting up a family office. We were setting up his family office, and it would be, what were you thinking about overnight? What's happening in the markets? What company are you looking at? Sometimes you're going really deep on a single stock, like spending months on it. Sometimes you're looking at 3 businesses in a week, and you're just trying to go into a really high intense environment. If something's moved in the market and you think, and you thought there was an opportunity there, but he's so, it's his passion. It's such a kind of fundamental part of his energy is the markets, and he just loves it. He loves stocks. He loves thinking about it. And so, we might be in the office, and it was just a masterclass every day, basically. Do you have and then there was a lot of, I work late hours. So I one of the things I really learned through working for him is the way my brain works, and I'd sort of known this for a while, but I like to go deep till 3 a.m. and just reading and writing and working on something. I really like to work in really concentrated, long things, often late at night. And, so there was that working from home element. And then there was also just the kind of in the, between the hammer and the anvil, really like looking hard at stocks. And, it was a colorful, high intense environment with a profoundly passionate, extraordinarily brilliant man is how I would describe it.
It's amazing to hear you say that, because so many people have an intensity for investing or the stock market generally, and sometimes it does wear off on them. But to go decades and decades and decades is testament to...
and then there's... Oh, sorry, I was just going to say that his mind is so nimble. He will spin on a dime and just changes, and that's one of the things that impresses me. That he's so impressive is that ability. As you getting into your golden years, his prime, let's say, to still be able to have a nimble way of thinking about stuff, and to change your mind, and to take in new ideas, and to execute on new information. And I've got a good friend who's a very good investor in California, but he's private equity, so a totally different style. But he talks about one of the guys, some of the guys of kind of Kerr's generation that work with him, they're very comfortable, and they're in the shop, and they've got their process that they used in the 80s and made a fortune on, and they're still using that process. They're not kind of evolving. And that is no way a description of kind of Kerr's process and how he looks at markets.
Fascinating. Yeah, because I often think of that, like that a lot of investors are really good at, like we see this with fund manager track records in particular, is they might have a process that's built on some sort of success, let's say, and then they have this kind of pattern recognition for that same technique. They may dress it up or down in with jargon or fancy charts or whatever, but at the end of the day, they have a particular process. Like maybe it's like a migration from desktop to cloud, or maybe it's like tech hardware, revolution from the 90s through to the mid 2000s, or maybe it's financial assets, or maybe it's like REITs, or whatever the case may be. Yeah. Or in the case of quant funds, it might be like price to book, arbitrage across, large data sets, whatever the case may be. But a lot of the times it doesn't stand up more than like 15 years.
Yeah.
But some people just have that ability to mold and to adapt. And obviously, like we could talk about like Buffett, which you kind of alluded to earlier on, or like Charlie Munger, or these types of investors that have these amazing track records. And they have this kind of like, I guess, agility in terms of their ability to adapt to different market conditions. And it's really impressive to see.
Yeah, I think, this is going to sound a little bit way off, but it reminds me a little bit of Kung Fu films, in that if you ever watch Kung Fu films, the great Kung Fu masters, they learn a style, and then maybe they learn other styles, but they've got this core style. And I think sometimes the initial lens that you're looking at a stock through, that there is that pattern recognition, and there is that thing of, okay, well, it lets you discount or emphasize information really quickly, because you glance at what's the shape of the business? What's the way that it's generating its spread? What's the debt? What does the PE look? How does it generate its profit, and what's it using to make that profit? And there's those sorts of shortcuts, and it's sort of like, similarly, if you go to university and you learn different disciplines, kind of give you a different operating system in your head. I think it's a little bit like you're running Windows or you're running Mac, and the clock speed that you're running it on is kind of somewhat less important than the actual software. And I think that so he certainly that there's a deep knowledge there, and there's rules that he applies to things, but it's also just there's a willingness to change your mind. And I think that that's something that people find in general, not just in investing, much harder to do as they get older. And there's probably actually physiological reasons for it too. It's probably when you're very young, the parts of your brain where the connection centers where the electrical signaling is coming from is much, much closer together. And as you age, it gets further apart. So that thing of wisdom, people talk about wisdom, that there are actual physiological, it's loosely understood, but there are physiological elements attached to that with aging. And it generally seems to be that these centers where all this activity is happening, they get further and further apart. So it gives longer for that thing to think. So when you're young, you tend to be less kind of, you're jumping to conclusions much more quickly, and you're making decisions with less thought. As you age, it actually physically gets slightly further apart, and probably it underpins wisdom.
Yeah, it's probably the idea in action as a result. Less, you're not sprinting to the next thing. You see it as a marathon, and you use that to your advantage. Yeah. In an article that was written by John Addis, the great John Addis, who's appeared on the show before.
Incredible man.
Yes, he is indeed. Fellow Melburnian. He asked you guys and the analyst team, he said, to reflect on your greatest investing lessons learned. And Nathan, Gaurav, and everyone on the team had some great answers. But yours was very interesting. And it's kind of like, I don't know if it was kind of like a bit of a rebuttal to this idea of these big lessons and the importance of a singular lesson. Because you said, quote, "The most critical lesson I've learned in investing is not to over-index to any individual lesson." So, end quote. So I'm curious for you to expand on that for us.
Yeah, I mean, if I was more eloquent, maybe I would have just said there's no silver bullets, but just don't over-index to things, because I think, and probably some of this comes from that earlier experience I had with the crypto world. But fundamentally, if you buy any asset and you're speculating on an increase in the future value. If you buy an asset and you think it's going to go up in value, you're speculating. And speculating is fundamentally fortune telling. And there are you might be, you're speculating on a direction, but between any decision you make or any kind of rule you apply and an outcome, there's literally probably an infinite number of variables. And I think what people often say are like investing lessons are them either over-indexing or under-indexing to a variable and actually telling you nothing about the underlying calculus of it. And so that sounds really highfalutin, but like another way of thinking about it is I think on some level it's a bit like buying a lottery ticket. Now I know that you're buying a cash generative asset, and I know that, over time, the value of a stock, stock prices tend to track earnings. So there is more to it than that. But on some level of abstraction, there is a speculation on the future, and it's like buying a ticket. But maybe it's not a lottery, it's not Powerball, it's not, 1 in 500 million chance. Maybe it's more like a meat raffle at a pub. And so you've got like a 1 in 50 chance maybe of winning that meat raffle. And what tends to happen is they win the meat raffle or they don't win the meat raffle. And you don't really think much further than that. But with investing, I've seen so many people, and it's like, well, it's because I drank the Guinness and I didn't have the Carlton. And if I had bought the schnitzel and I hadn't bought the fish and chips, then I would have done better. And both for the positive outcome of making money or the negative outcome of losing money, they attribute lessons which at best probably have a very, very, very tenuous connection to that outcome. And I mean, this sounds like you end up with information paralysis, but I just think it's more about knowing that being quite accepting of the chance that you're going to go well, and being quite accepting of the chance that you could go very badly, and not kind of getting too wrapped up in either of those outcomes.
Have you ever come across Annie Duke, the professional poker player?
No.
She's got some great books. One of them in particular is called How to Decide, which is, I don't think it's the one that made her most well known, but this book in particular talks about how to decide. And she talks about this phenomenon called resulting, or she calls resulting, and other people have come up with other names for it. But it's basically judging the quality of a decision on the outcome. And I think that's similar in a way perhaps to what you're talking about, which is this idea that you could have won the meat raffle and thought, well, next time I'm going to buy 5 Guinnesses and I'll try and win even more, you know?
Yeah.
And I see that a lot of the time. It is like so obvious with investors. And I think, was it in the original security analysis from Benjamin Graham, he said, by the third time an investor is incorrigible, like basically if someone wins something 3 times, it's fact. It is going to happen. And people then over-index to that one particular thing, which I find is fascinating because we see that in our lives a lot of the time. And by the way, a lot of Ponzi scheme operators know that, so they make it feel good twice, and on the third time, your money's gone, right?
Exactly.
And that is so true. And I think it ties back into what you're saying before about pattern recognition. It's like there are multiple things that can be true at the same time in your mind, and there are different rules of thumb. Like even at the top of the show, we talk about crypto and talk about like cash flow, generative assets, but it's not the only way to make money. So if you only assume that, I'm guessing I could be wrong here, mate, but I'm guessing maybe your crypto investment was one of the best you've ever made. So like, had you applied that singular investing lesson that you've kind of inherited from a book or something like that, you maybe would have missed that.
Yeah. I mean, I think that's true. If I hadn't if I had started in finance, I probably I would have taken a very different approach to kind of working in the crypto world. And if anything, and initially when I started, it was funny. I had a journey in the crypto world in that I started working because I came from a fashion magazine. So I started working in marketing and PR, which was a very different thing, in content, and then kind of content for crypto stuff. But then I worked for this platform and then started, you were kind of getting pitched with things. So it all sort of turned into venture capital. And then that went into, and I was working with AI businesses and VR businesses. And so I was in tech in California, but the path to it was very, very elongated and strange. And if I had come in as one of the finance guys, I probably would have had just a completely different experience. And I remember I was in New York in 2017, and I remember at this conference, and there were all these guys, because people were waking up that there was something really happening here. And I remember being in this room with all of these guys from New York hedge funds, and they couldn't even begin to get their heads around what was happening. But it was charlatan city. There was incredibly dodgy things happening. And I'll give you an extraordinary example. There was an event, and this was actually in the New York Post. They wrote about this afterwards, but there was an event at that conference where the prize for the party, not even anything to do with the business, the prize for the party was 2 brand new Aston Martins. So they had this big party on a boat. You got a neck band or a wristband, I forget which, that was like had colored lights in it. And at some part of the party, they started flashing, and the ones that flashed a particular color or something were the winners. Just coincidentally, the 2 winners both worked for the company, and they just got Aston Martins, new Aston Martins. So, so when you're in that environment and you're seeing that happening, and you want to be profoundly skeptical of what you're seeing going on around you, but it's also just a kind of interesting, a very interesting world to get exposure to. And I think if I had come into this through, a commerce degree, it probably just wouldn't have happened. I probably would have been too sensible to have ended up in that sort of situation.
Probably wouldn't have been at the event, let's be honest.
Yeah, possibly not.
Yeah. So one of the second lesson that you offered in that John Addis article was, just take a little snippet out of it, was, quote, not to missize your bets.
Yeah.
And I think one of the things that you reflected on when you said that was like edge computing or cloud computing. So feel free to use that as the lens to describe your comment on that. So not to missize your bets, or just take it any way you want.
Yeah, definitely one of the probably. I would say I've been a better stock picker than capital allocator. So if I distributed my bets more intelligently, I would have been doing a lot better out of stocks. But I think, the example of edge computing, I got quite seduced by some of the technology that those guys were deploying. And I still think there is really good use cases for being able to deploy stateful light apps at the edge. And I think it's going to become more important with AI. But, something Kerr taught me is being early is the same as being wrong. And, so that allocation has been probably in my own investment journey has been a weak thing for me. I haven't been particularly good at, I've chosen some great companies and haven't deployed as much capital into them as some very bad businesses. But I think the other thing with that lesson is I saw someone in America swing for the fences and wipe out their entire fortune. And so I think missizing bets, like, this guy basically put it all on red, like had made a fortune, had exited a tech company, put it all on red with a new venture, wiped out the lot. And, that lesson, when you see someone wipe out like that, it tends to sit in your bones to just be more diversified. And to some extent, it goes back to that earlier point that I was rabbiting on about with the amount of variables involved in a decision. There's no such thing as a perfect decision. Games like chess where you have perfect information and you should be able to see where every single outcome is on the board. You don't win every chess game you play. So anytime you're buying a stock, you mentioned poker before. Poker is a game of probability, but you pretty much know that there's a probability that you can assign to every outcome. Stock picking is much worse. It's uncertainty. You don't know anything. There could be a meteor strike. There could be a super volcano erupt. There are things that can just wipe out a position, and you've done everything the right way, but you've made the right decision on the basis of the right information, and you can still get killed. And so sizing your bets to kind of just maximize the diversify your risk, I think is the right way, is important. And I know great investors, but much better investors than me who run really concentrated portfolios. But to me, when I sort of see running 4 or 5 stocks, it's almost like leverage, because your upside is disproportionately higher, but your downside is disproportionately higher too. So I think that kind of aspect of asset allocation, I think is really critical.
Would you have done better off equally weighted?
Probably, yeah, probably. But it's also the other thing you sort of got to think about. I try to think about too is geography exposure too. And at the moment, I know a lot of people who won't go near China. And it's hard because so many companies' sales are in China anyway. But, that I guess their position would be, well, that's as close as you can get. But then I look at it and I see it's the largest economy in the world. It's, frankly, it looks to me at the moment to be a more stable country than America is. Yet my own portfolio, I'm overweight America and underweight China. So even though I'm rationalizing and I'm perceiving something, I'm not necessarily acting on it. And that's another aspect, I think, of kind of weighting portfolios.
One of the things I wanted to circle back to was dating apps, and I don't want to make you Mr. Dating App himself, but I know that you've written up some stuff for Intelligent Investor, and I read some of it, and you also were featured in, I think it was like SBS or ABC.
Yeah, Inside. What's it called? Inside.
Yeah, and I'm just really interested by this because at the top of the show, you kind of talked about this idea. If someone's not familiar with dating apps, obviously you get likes, sounds like Facebook, but also you can pay subscriptions for like a better part, sounds like Gumtree or Google Ads, where you're at the top of the search results, like a marketplace, right?
Yeah.
But the economics of these businesses, at least according to the research that I've read from you, is vastly different to, say, something like Facebook. So maybe we'll just start there. And the reason I bring this up is because I believe you still own companies like Match and Bumble and these types of things.
Yeah. So most social media platforms, inherently, they're making money selling advertising. Grindr does sell advertising, and it's a meaningful part of its revenue profile. But most of them, it's sort of there's 3 businesses in this. There's Bumble, Match, and Grindr. 3 publicly traded companies. They're collectively doing about $6 billion in sales. And they generally are the fundamental problem, I think, with these businesses is that the product that they're selling, they have almost no control over. So customers are spending money in the hope of getting dates, but there's this huge mismatch where the people who get the most dates don't need to spend anything, and the people who are spending might still not be able to get dates because it's actually they just don't have any control over the way that the network connects with each other. And so I think that huge disparity in the product, the dream that they're trying to sell and the way that it's used makes the networks very fragile and frankly makes the businesses just not good businesses. And so when I bought Match Group, I just fundamentally misunderstood the business. So I thought, because they're essentially like they're a monopoly, they've got the capital base. If new technology comes in, it's really hard to get a network to that size. Almost probably at this point, not impossible, but very, very difficult. So they've got really, really strong brands that come with a very strong network. And I thought they could monetize. I thought they'd sort of figured out the kind of ticket to turning on the taps of cash. But I just hadn't understood the network. So I'm probably at some point at the moment, I don't mind that I have a position in it. It's been bashed up, but I'm not it's a small position. I'm not uncomfortable with it. Bumble, I do something that is probably a lot of people will be horrified by, which is I will, if I'm not very good at keeping across lots of watch lists and stuff. So if I'm vaguely interested in a company, I might just buy 1 or 2 shares in it. So I've got like 1 or 2 shares in Bumble. I have to disclose it, but it's not a position. I don't see, because I know that it is a good framework of thinking about it, that you own the whole business. It's like you've set up that lemonade stand. That is your lemonade stand. You are invested in owning that as a business. But just from my own, and this probably comes back to that breaking, cutting my teeth in crypto, because crypto as well, you have all these random cryptos in different weird wallets. I just will have like a tiny position. But Match I did buy, and I have lost some money on. But I think it's not at a crazy price. There are aspects of the business that are good. The brand is incredibly strong. It's not even just a byword for a product, but it's almost like an entire pattern of behavior, a fundamental way that humans are actually interacting now is, this company has an extraordinary kind of monopoly hold on it.
But so maybe it comes out with a different way to monetize.
Potentially. I think if you look into the kind of underlying data on these businesses, one of the things that's sort of so interesting is it's this tiny minority that actually are willing to spend money. So about 1 in 10 is willing to spend anything, and then you've got this huge skew where sort of your top 2% of customers are generating 60% of revenue. So it's this power law distribution, and it means that actually that there's just such a disconnect between the way that the revenue is generated. You need to keep these users on who don't want to spend money because they essentially market the hot people on the app to other people. So that's essentially what they're doing. They're hugely manipulative. They're working and constantly trying to hack your psychology. But some of the best businesses of the last few decades, that's been their special sauce, really.
Well, yeah, that's the social media formula, right? Yeah, and people on ethical grounds screed out social media companies for that very reason, and just like they do with like pokies companies, right?
Yeah,
and I guess it just depends on where you sit on that spectrum. I've got 2 more questions for you.
Yeah.
But the one that I thought was quite interesting, because I know the types of companies that you focus on, and I'm just interested to get a different take on this, which is, if I was to give you just like a 3-year view, so it's not super long term, but it's kind of like on the horizon, we can see the shape forming. Do you think Microsoft, which has obviously the partnership with OpenAI and Copilot and a just unbelievable business to business ecosystem, let alone business to consumer, or something like NVIDIA, which is kind of like this software meets hardware type business that's like at this in the supply chain is like the thing. If you took a 3-year view, which business do you think would be a better bet for AI? If someone was like an AI purist and they're like, I want a focused exposure through a company, and this is not a recommendation. I'm just curious
Yeah.
you think the technology and how these businesses competitively sit in that ecosystem are.
Yeah, I mean, it's a multi-trillion-dollar question at this point, right? I think that the way that there's a question of price, and there's a question of what the business's posture is in terms of its products and how it's going to be generating revenue over the next 3 years. And I think that NVIDIA's hardware at this point in time is so entrenched, and it's entrenched through its software. The CUDA libraries, it was amazing. Eric Schmidt, the CEO of Google, gave this absolutely fascinating talk. I recommend trying to find it. He tried to get it taken offline. It was done at Stanford. But he talked about CUDA libraries, and he had a really nice analogy. He basically said that so CUDA are the software development kits. So to run a lot of AI applications, you're using the underlying libraries that are supplied by CUDA, or you're sort of using the CUDA ecosystem to do it. CUDA only works with NVIDIA GPUs. So you can buy an Intel or a AMD GPU. You can't run the CUDA library AI workloads on it. So it's entrenched the business to such a degree. In the next 3 years, I think looking at the hardware that they've already announced, the stuff that's coming online, the lack of alternatives, I think NVIDIA is in an incredible position. But it's on a $3 trillion valuation. And it's, if you think about it as like, I think sales are sort of 250 million. It is so highly priced that risk kind of weighting scares me. But I mean, Microsoft's also a $3 trillion company, and Microsoft's ecosystem. So both in terms of their Azure cloud, so all their cloud services that they do, and also just their 365 product suite. I think they're connecting the dots on AI and on the chatbots better than just about anyone else. And so I think it's going to spread across their ecosystem really well. So I think on a slightly longer term view, Microsoft's at a slightly more reasonable price. But I think NVIDIA, at least for the next 3 years, it's in a pretty extraordinary place. But beyond that, I spoke to NVIDIA management or their IR a couple of years ago, just after the Hopper architecture drop. So just a few years ago. And I remember being kind of underwhelmed because I asked them about China, and their response was basically, we don't really see it as a problem. So the US government has kept trying to bring in rules and guidelines to stop the spread of AI and to kind of limit the ability of China to get that hardware. And NVIDIA's, while some companies like ASML, their approach was like, okay, hard stop, we're going to cut this off. NVIDIA's approach has been, okay, well, let's work to let's work to the letter of the law, but not to the spirit of the law. So they will like look at the fine print and make a chip that falls just shy of what that limit is. And I think that exposure is significant. Jensen, the CEO, is clearly a very impressive guy. He is so central in the spotlight of that business. The way they run their kind of iteration, they're so innovative, their way they run innovation cycles. But, there's a sort of key man risk there. Plus, I think you look at like Intel, they stumbled on 2 nodes and now they're worth less than AMD. Can NVIDIA, can it grow into its current PE? I think it's a 75 PE or something, trailing anyway. I don't know, but I think over the next 3 years, that is going to be an incredible business that's going to just generate a vast amount of cash.
Yeah. Well, they're both extraordinary businesses.
Yeah,
right?
Absolutely.
Yeah. I'm going to try and dig that up. So the Eric Schmidt Stanford talk.
Oh, it was fascinating. One of the things that's fascinating about it, so he was talking about, I think it's called Anduril, but sort of an arms company. And he says in this thing, I'm now a licensed arms trader. So it's a pretty interesting, it's an interesting kind of look at that guy. Julian Assange in his book wrote a whole chapter on Eric Schmidt, and it's really interesting. He's a very interesting guy. And this sort of, if you look at that Julian Assange chapter on him, and then you read, or in whichever order, and then you read this speech that he gives, you get it casts Google in a different light to kind of how you might have thought about it. I think actually WikiLeaks tweeted with a link to the Stanford speech this company is not what people think it is, which is, just a kind of interesting thing to think about.
Wow, yeah, fascinating. Really fascinating. So we can play along, or anyone can play along with your writing and your insights. You jumped on the podcast recently with Nathan and Gaurav, an Intelligent Investor, and there's always a link. Like Intelligent Investor is a long-term, really supportive partner of Rask Podcast. So there'll be a link in the show notes to learn more about you. How long have you been with Intelligent Investor now?
About 6 months.
All right. Okay. So fresh meat, mate, in the scheme of things. But that's
fantastic group of guys.
Oh yeah. Absolutely fantastic. The entire community around it as well. So passionate, all the investors. So I'll put a link in the show notes for that, or if you're watching on YouTube, in the description field. But my final question is more philosophical, and it's given to everyone who appears for the first time on the show, which is this idea of just like a reflexive activity. If you could go back and tell your younger self one thing about money, business, life, investing, whatever the case may be, what would it be?
Yeah, it's such an interesting one. Because I'm inherently not a person that kind of lives with regrets. I think if you're happy in the present, and again, it kind of goes back to that worldview I said where there's so many variables in things. You change one little part of anything in the past and you change the whole thing, or you're going to change large portions of it probably, right? But I think it's just unscrambling that egg. It just sort of seems fruitless. And if you're happy with who you are in the present, I don't kind of, I find it sort of difficult to sort of focus on what might have been. I think as an investor, the things that I've made mistakes with have been getting too caught up in the shiny things, too interested in underlying technology in the kind of foundations of what's happening, even at the atomic level, right? It's like a company like ASML doing amazing tech stuff and not thinking enough about it as like a business with products generating revenue. So I think, that those would kind of, to just, but again, that's been part of the journey. And I think it's hard to kind of isolate something that would have been more useful to have known. I mean, I could have said buy NVIDIA to myself 10 years ago, and that would be, if I could send a little message through time, it might say that. But yeah, it's an interesting one because I do find it really challenging actually to just sort of to try to think of what's been those critical lessons, because I think we often like to think of, you get that lesson on your grandfather's knee, or he tells you that thing. And, often a lot of stories go that way, right? Stories in movies, it comes back to some moment of motive. And there are certainly events in life that shape you profoundly and shape you forever. But I think that it's an attenuated process that is a journey. And so maybe it would just be to just enjoy the journey, because I think, you're trying to make money as an investor, but I think life is about a lot more than just making money. It's also about, and there are many experiences that you can't buy. And so I think, if you've got that mindset and that relationship with life and with investing, and business, But I guess if I can throw one last thing, it's also to just be skeptical. That was one of the fundamental lessons of Kerr. He said, he would often say, I've never been skeptical enough. And I think skepticism and being, frankly, untrusting in a business setting, in life setting, trust people, but in business, don't. That's also another thing that's been useful that I have learned the hard way, really, through being out there and seeing things happen and having victories and having big mistakes.
Yeah, I love that. That's great. And I actually do take your first point, which is that we kind of are the product of our journey, right? So being happy with that and content in the moment is like a superpower. And a lot of people wouldn't go back in time and give themselves any advice, maybe other than buy NVIDIA or
yeah, that's right.
Apple or something like this.
Yeah.
But like, people other than that don't need to, right? Because they're perfectly content with who they are and the journey that they took. And I think that in itself is a really valuable piece of advice. So, mate, I really do appreciate your first time on the show. Absolutely nailed it. It was a delight to chat to you. First time we've spoken. And appreciate the time.
Thanks so much. Thank you. Fantastic. Really enjoyed it.
Thanks for watching this video on the Rask Network. While you're here, don't forget to like and subscribe so you can get videos each and every day on business, finance, investing, and so much more.